Good evening. Thank you for taking the time to sit down and chat. We want to keep this loose and free flowing, so I'm just going to jump off with the questions. Feel free to answer. These are directed for all of you.
Awesome.
Regarding the growth and everything that we saw in 2023 last year. You can always see our member count on our digital boards. We saw tremendous membership growth last year. Can you talk about how we expanded our membership availability in
Sure.
2023?
I'll take this one. Yes, we have been growing at a really fast clip several years in a row now. And in fact, through the third quarter of 2023, we were actually the fastest growing credit union in all of Texas, Oklahoma, Arkansas, Kansas, and Missouri for credit unions 500 million in assets or above. And so, not only does it feel like we're growing fast, not only does it seem like, every time you look up that membership count is growing, when you compare it to the national averages, we are growing about 3 times the pace of most credit unions. And, we attribute that to a whole host of things, primarily our focus on ensuring that we offer our membership the lowest interest rates possible on loans and the highest returns on their deposits, and then give them the services that they expect as they try to solve the consumer financial needs that they have. And we do this, we try to be relentlessly focused on that member experience and listen to our members, try to offer the products that are relevant to them based on their current stage of life and the economic environment that they find themselves in. So for an example, this year we we knew that our members were still needing access to the equity in their homes, but with the high interest rate environment that we're in, nobody's going to want to refinance their 3 or 4% home loan to tap that equity. So we introduced the home equity line of credit this year. We had not historically offered that to our membership, and we've seen huge demand for that. So I think that's just one example, but by focusing on the resources that our membership needs, we've been able to ensure a steady flow of new membership to the credit union.
I also think that there's some of our expansion into the new markets. We added 23 new counties to our membership, and so that helped as well, moving us to 32 overall counties. We also partnered with some additional groups such as the Friends of the Lubbock Library to offer membership growth. We also added Texas Tech Alumni Association and grew our partnership with them and allowing for members an easier way to become part of the Alliance organization.
That's right.
Agreed.
We like to say that we're a credit union for everyone. We're really putting feet to that in adding those.
Yeah, I think that, and then I think the presence of our physical spaces, really spread out across the city of Lubbock, and then now actually down into Big Spring. We completed the merger with the Electric Utilities Credit Union down in Big Spring, offering the Alliance brand and the Alliance suite of products to a whole new group of individuals. And of course, if you're already an Alliance member, now you have another physical location that you can access all of our resources down in Big Spring. So
That was kind of a surprise in 2023, wasn't it?
yeah, it was. We, that actually came about when we, as Jonathan mentioned, when we expanded into the 23 new counties. As part of that process, you send out a letter to all of the other credit unions that already exist in those counties, and to inform them of your intent and get any feedback necessary. And that through that process, we actually synced up with the Electric Utilities Credit Union at the right time. They were looking for a merger partner as a small credit union, and this is a trend that we're seeing across the country, and it's accelerating. But the cost of providing the level of service that consumers expect and deserve in 2024, it's not cheap. And credit unions that are significantly smaller in assets are finding that they really just can't offer those services consistently or at a level of quality that consumers demand. And so it was a really good merger for us as it got us into a new market, but also a good merger for them and their membership to get access to the suite of financial products that you expect, such as online banking, credit cards, home loans, auto loans, things that are just really tough to offer when you're too small. And so, it came out of a little bit of a surprise, and it was turned out to be a really good opportunity for us.
Yeah, very exciting. Switching gears a little bit, Americans saw an uptick in fraudulent activity, especially when it comes to their financial services in 2023. How can you talk a little bit about how ACU kept up with the fraud attempts and how we're better prepared for 2024 because of it?
I would say you're 100% right that we have seen an increase in fraud. And I'm going to actually let Amber and Josh tackle this one a little bit. Amber, our Chief Risk Officer, deals, on the front line with all of the fraud, and then Josh, being over our facilities as a Chief Operations Officer, he's kind of directly over a lot of those conduits that we see that fraud occurring in. So,
right.
I
think with the fraud we experienced, we had to come up with a formal plan. What are we going to do to make sure that we're taking care of our members? And the first thing we did is to establish a fraud department. That's something that we really haven't had. We haven't had a process. One department handled some things, and then we had it, shifted around to other departments. But now we have a process, and we know who to go to. And if a member comes in and they, express concern, they know to get that to our fraud department, and then we can start taking the steps that we know we need to take to protect our members and their assets.
And I think, you'd probably agree with this from our previous conversations, but, the more technology that we make available to our members, it's a double-edged sword, right? It benefits everybody dramatically, ease of use, ease of service. You can do everything from your phone now, but those same channels open us up to new types of fraud, new types of nefarious activity, and of course that goes with our ITMs, with our mobile app, all the different things that we try to do to ensure that our members have really good access to their credit union.
Yeah, and you're right. I mean, it's totally a double-edged sword. I agree with Amber. The consolidation of everything into one conduit with the fraud department makes things very, very seamless. It makes it to where the member's not having to talk to different places, but it also consolidates the knowledge from the internal standpoint so that we're seeing all the same stuff by the same people, and they can pick up on any trends that maybe seem a little more obscure or a little harder to pick up on normal stuff. And yeah, just like Matt said, the accessibility for our members also gives accessibility to the people who aim to do bad things. From a facility standpoint, we've done quite a few things with our machines, our ITMs. We do that so that our members can have 24/7 access to their accounts through our drive-thrus. But at the same time, there's vulnerabilities there. And we've done quite a few things in the last 12 to 18 months to try to address some of those vulnerabilities. We've tried to tighten up security on that. We've added a pin at the ITM to add an extra layer of security for our members. That's something that we've seen a great deal of success in reducing the amount of fraud at those machines while not really hindering the member experience. And that's something that's very important to us, to be able to balance the security and the technology to help with that security with the ease and accessibility for our members. We want to make sure we don't ever put so many restrictions on that it hurts our members' ability to access their funds and to do their business with us.
It's finding the right balance. And the ITM pin was a great option for our members to have because it did reduce the fraud substantially.
And I think while we're here and while we have our membership's attention, I think it's a good time to add that we will never reach out to you and ask you for your sensitive personal identification information, financial information. We have that already. So, please, be careful when somebody's reaching out to you. We do get impersonations. And then on top of that, as members, please try to make sure that when you're interacting with us, if it's through an online format, whether it's texting, whether it's emailing, whether it's through our website, just make sure that you're doing your due diligence to ensure that it's actually us you're interacting with and not a fraudster.
And I've learned a lot this year too, just from Josh and the technology team that we have. We really focus on safety and soundness. And there's a lot of times that members come to us, or even some of the employees at the credit union, they say, why can't we have this app, or why can't we use this? And I've learned this year that we don't offer every app that's out there or connectivity to those apps, just because of safety and soundness for our members as well. And Josh taught me a lot of that. I'm the finance guy, not the technology guy.
You're becoming one.
I'm becoming one slowly.
Putting all of those things in place was a huge part of 2023 and the success that we had in protecting our members. One of the things that all of us is going to remember about 2023 is inflation and the rising rate environment and how difficult it was to keep up with that as a financial institution. Who would like to talk about our journey through that?
I'll just start broadly by saying, it wasn't just 2023, it was 2022 as well. And 2022 really set the stage for, the peak pricing pressures that we saw in 2023. And of course, we all know this really goes back to the pandemic,
Right.
The massive amounts of government stimulus money that went out to try to stave off the worst possible scenarios from the shutdowns. And then you had supply chain issues, and all of that, really came together to create a inflation environment that we haven't seen in this country since, really the 70s and 80s. And so in response to that, you saw Jerome Powell and the FOMC get together and start rapidly rising interest rates, one of the fastest rising rate environments we've seen. And then in 2023, you got 4 more rate hikes on top of that. And that gets us to these peak price pressures that we're all seeing. Of course, you mentioned inflation. You really can't afford to let inflation run loose. So you understand why the Fed made the moves they made. But obviously, their intention to slow the economy down is going to directly impact all of our members in the form of higher borrowing costs on mortgages, on car loans, on everything. And then, on the flip side of that, though, you have a higher rate of return. And I would just say, broadly speaking, that, we were as a management team, we were very intentional on ensuring that we stayed on top of the rate environment, both locally and nationally. And so you're talking multiple 2-3 times a week meetings to ensure that we're priced appropriately. Because at the end of the day, regardless of where that rate is, where the rates are ultimately, we want to ensure that we are remaining true to the credit union's mission and the credit union's values. And that means ensuring that we still have the lowest prices on our loan products, and then that we still offer the highest rate of returns on our deposit products across the board. But you might want to go deeper into that.
Yeah, no, inflation is still an issue. We ended 2023 at a 4.1% inflation. So until we see that inflation number come back down into that 2% range that the Fed's really focused on, we're not going to see any relief from these rate hikes. I don't believe we'll see any more rate hikes, but at least for the foreseeable future. But we're not going to see any rate drops either. We're not going to see any relief from this pressure until inflation gets under control.
Yeah, it makes sense. And it seems like a lot of, the Fed's operating on data-driven decision-making, and it seems like the data points that they're digesting aren't coming in where the market would like them to come in as fast. Inflation's taking longer to come down than anybody would like. And so I know at the beginning of this year, we were really hoping for maybe a March, rate cut. And then now, I think the last information I've seen is showing that, the best chance is probably pushed out to at least June at this point.
I would say we have a very, very good chance of it going at least into the second half of the year, if we see one at all this year.
That'll all depend on
everything depends on how the market is reacting throughout the year. Like I said, if inflation doesn't come down, we're not going to see those rate drops. And to be honest, the odds of us seeing a rate hike or a rate drop before the end of the third quarter is very, very slim.
Yeah.
Great.
Well, thanks for bringing us down.
Yeah. Back in December, the Fed comes out with their probability of rate hikes, rate drops constantly. But back in December, there was about a 98% chance we would see a rate drop in March. And as of today, it's like 2% chance to see a rate drop in March. So
as the market keeps adjusting, as the Fed keeps digesting all the data that they get, it just keeps pushing it out. They're not seeing the rate of decline in the inflation that they'd like to see.
You mentioned earlier some of the new loan products that we've added. I think that's an important piece to how Alliance responded to what was going on in 2023, right?
For sure.
We added that HELOC product. We added a few more things. Being nimble is really one of our strengths as a financial institution. Can you talk to us more about adding those things?
Yeah, and I might let Jonathan touch a little bit on the loan products themselves. Going back to the HELOC and the true second lien product, we wanted to ensure that our members still had access to the equity in their houses. One of the things we saw during the pandemic is a lot of home equity cash out refinances.
Yeah.
To do things, do anything, consolidate debt all the way up to put in additions to the house, improvements, you name it. And as rates started to spike, we weren't getting any reduction in that kind of demand. We were getting actually an increase in people's, I think there was a concern they might have missed out on the chance, and they still wanted to try to take care of some of that stuff, especially when they saw home values rising as fast as they were. And so, Jonathan and his team did a fantastic job putting together that HELOC product so that members, yes, they're still going to see a higher interest rate on that borrowing, but they're not having to reprice their entire loan, their entire home loan, just having to pay on the amount that they need for those home improvements.
Yeah, could you imagine having to reprice your 3% loan to today's rates? That was one of the reasons behind that was how do we allow the members to get access to their money and not have to reprice their whole loan? And that was a big part of that. And I think you saw a shift in really starting to partner with other companies to improve our products this year. We even created some internal products. You talked about being nimble. We created the Home 100 product this last year and a half, really. And it allows our members to come in, and we're using some companies behind that to allow us to do with no money down. And in a time when you're trying to hold on to your dollars, that's one of those products you really want to have.
Yeah,
that's a good point. When the average bill at the grocery store has gone up, 30-40%, if not more, it's that much more important to still be able to do things like affordable housing without having to use up your entire life savings to get it.
And we know people are going to continue to move, and that's something that, it's like auto buying too. You don't stop. You still have to drive your car to work and have a car. And so all that stuff, it's important for us to be, like Matt said, one of the best rates out there and trying to find products that help our members. And so that's really our goal. And I think that's going to lead us into the future, because I think as a leadership team, we've changed our mindset to really focus on what else can we do. We took some of those small wins and we're taking them to the next level and going, what else can we add to our members as benefits or add to them as, discounts or whatever it might be to help them out that doesn't really take a whole lot from what we're doing.
Yeah, I think that's a good point. And not only did we try to, revamp or introduce new loan products, we also started looking for ways to leverage our membership base so that we could generate what I'd like to see is generate an ecosystem of benefits for our membership. And hopefully we'll see more of that in 2024. But what our members did see in 2023 was the partnership rolled out with Reliant Energy. And again, when you talk about our boards, our digital signs that are at almost every one of our locations, you can see that our membership count, we're growing by at least 500 new members per month, or at least opening that many new accounts per month. And, when you look at the fact that we've got with our primary and joint owners over 48,000 members in a city the size of Lubbock and surrounding area, then you kind of start to get a sense for the amount of weight that I think our group can add to a conversation with somebody like Reliant to try to generate a true value for our membership. And so in this case, our members got 10% off their electricity rate when they went with the Reliant. We are working to bring out home and auto insurance discounts and and other things as well as we try to leverage that size and the clout that our membership base can bring to the marketplace.
That's right. Speaking of adding value to our membership, and keeping our rates low, it's part of our growth over last year and the last few years, adding branches and adding enhancements to our existing branches. We've added ITMs. Can someone talk a little bit more about those additions and enhancements?
I'll start and then probably let Josh jump in on that a little bit. But I would just say that and kind of with going along with the theme that we've been talking about, as technology changes and our memberships, really all of us, our day-to-day consumer expectations change, right? The credit union experience has to change with that. And part of that means, we expect to do everything from an app these days. I mean, really, whether you're buying stocks, whether you're buying a Starbucks coffee or, getting your oil change, it doesn't matter. Everything is app-based now, and, that's convenient. And members can do, anybody can do business, going 70 miles an hour down the road if you have the right app. And so I think the expectations to be able to do business, more conveniently through digital means and more often are driving what we're trying to do behind some of our physical changes. So, you talked about accessibility. One of the things I'm very proud of, that we're all proud of, is switching our drive-through experience to the ITM experience. This, in my opinion, it gives our members access to basically a full-service branching experience 24/7. So if you're working the night shift and you get off and everything else is closed, you can come to our ITM and you can cash your check. You can make your loan payment. You can do the things that you would expect to do during a normal drive-through experience. And on top of that, if you come during business hours and you don't want to do it automated, you can still hit the button and have a live teller experience that is honestly better than the old experience from the canisters and that kind of thing. So, we really went all in with our ITM drive-through transformations as part of this accessibility campaign. And then on top of that, obviously, we're still adding features to the mobile app. We're still trying to enhance the online banking experience. And as Josh said, more on that to come as well as we start seeing some of the fruits of those investments. And, we are also actively renovating several of our locations. And then and I'll let Josh kind of talk to that a little bit and what members can expect to see in 24.
Yeah, so far out of the, 8 branches now here in Lubbock, Indiana is a brand new branch. Obviously, it matches our brand. But a few years ago, we kind of changed the brand of Alliance Credit Union and really found something that we feel represents our staff, our members. It's an attractive brand, and it's something we want to have rolled out across the area that we serve. So Northwest, which is the branch over on Frankfurt and the West Loop, we're actively renovating that particular property. It's about 3 to 4 months away. We hope to have that finished by the end of the summer for sure. And the members that use that branch will be able to experience those new features, the new look, the new aesthetic, and then obviously the technology within the branch and the lobby itself. We have one branch remaining to do, and that's the branch over on 82nd Street in Pontiac. We'll be working on that to try to bring that into brand at some point. But the ITMs has been a big deal for us. The only branch we have currently not using ITMs is the branch at 84th and Quaker. That's something that's on the to-do list for this year, and we hope to have it completed probably third quarter of this year, and we'll make sure that our members have that same experience 24/7 there at that branch as well. And that'll bring all of our branches to that 24/7 banking experience so that everybody has that accessibility, the availability, and that's just something that we really believe in. We had a little bit of, a design process years and years ago on how we thought this experience was going to go. And I will say that it has turned out better, I believe, than we hoped. We do a lot of transactions through our ITMs in the drive-through, and that's something that I think is very, very important for our members. It's a great service, and we want to continue to do that.
Yeah, getting to say that our drive-through is open 24 hours a day is a pretty big deal.
But that's the speed of technology, beyond just the physical things that we offer. We want to be able to open accounts on, we do that right now. We can open accounts online, we can do loans online. We can do a digital from your phone. I mean, we're trying to get, I wait for the day that you can do a facial recognition and maybe do it going down the road, like Matt said, go boop.
Not if you're driving though, right?
Right.
And I think it's important to mention as well, I mean, we have a segment of our membership that still really, really enjoys the in-person feel and experience. All of our branches, we have our teller staff and lobby staff and our lending staff that is there and available to answer questions, to be there when the member needs them, to have that face-to-face conversation. That is not something that, at least in the very near future, we have any plans to change. We feel there's a great deal of value provided by being able to do that, to be that person that you can trust, sit across the desk from, have whatever kind of conversation, whether it's just questions or concerns or whatever that is. That's important to us. And with that, our Indiana branch, mentioned it a while ago, just kind of in passing, but 112th in Indiana, we have our new branch out there right across the street from the United. That's out on 1585 in Indiana. And I'm sorry, I said 112th, dang. But 128th Street in Indiana, right across there, 12812 Indiana is the address. It's our newest full-service location. We believe that that's going to serve a part of the community that is underbanked. Financial institutions have not made their way that far south in Lubbock yet. And I believe we're the furthest south financial institution currently. We're in a great part of town, super busy, very, very fast growing. And it's going to be really easy to access, getting on and off the new loop whenever it gets done. And we believe that's going to add a lot of value for that part of the community.
Yeah.
That's right.
And you were talking about the branches, how we still have traffic. I don't think that's the norm anywhere else. We talk to people all over the country, and they're talking about, well, how much walk-in traffic do you have? More like a ton. And we see like you said, we see the need for our members and that they want that. And that's part of being part of West Texas. Anybody that's grown up in West Texas, you want to wave at people when you're driving down the road and shake their hand, Same thing. You want to come in and talk to your loan officer and
Yeah.
No doubt. And I think to both y'all's points, the ITM 24/7 access in the drive-through was really, we felt like a good way to, it's kind of the best of both worlds. We ensure that you have the technological means to do business with us. But as both y'all mentioned, we still maintain traditional lobby experiences with live tellers and with loan officers and MSRs ready to help our members out. And that's not going to change anytime soon.
It's really an extension of the service. It's not a replacement of any service. It's an extension of our service and makes that availability there for every person, any time of the day.
Yeah.
And speaking of our ITMs, we had a huge expansion on 34th at our 34th Street location in 2023, adding how many terminals?
We have 5 new ITMs out there. So we had one that was there. We added 4 more, built a big structure, makes the traffic a lot easier to get in and out of that particular branch. Makes it way more convenient for the members trying to do their business there. Yeah.
It's not backing up onto 34th anymore, hopefully.
Yes, that's correct. And it looks great. It's fantastic.
Yes, it does.
Aesthetically, and so very, very proud of that. And we're excited for the benefits that adds to our members.
Awesome. As we become more accessible and we're opening new branches and things like that, we are also becoming more accessible in our new markets, specifically Amarillo. We talked a little bit about Big Spring, but also Amarillo, where we don't have a physical location. Can you talk about that expansion a little bit?
Yeah, I think I'll let Jonathan kind of tackle that first. And I would, I'll just throw it to him.
Okay. We've developed a business development team. And so that was part of their task, was how do we get into the Amarillo markets and to these other additional counties that we've just added, because we want to be able to serve all these counties. And so we have a team of 3 employees that are now going out and trying to get our brand out there, our name out there. Mm-hmm. We've added a new loan officer there in Amarillo to do the mortgage loans in that market. And we're really trying to tackle Amarillo with mortgage lending. We feel like that's probably the first step that we can go and make it an immediate change to the market, is stepping into that area and offering the products that we offer to our members, in our membership. And it also comes with the marketing team. Our marketing team does a great job of helping us get out into those areas. I think as a leadership team, we've talked about that. How do you get in the market? And it's Amarillo was our first, let's get there and let's go. And then we've kind of learned a lot of things while we moved into that market on what's good, what's not good, what can we do to be better. And so it's going to allow us hopefully this year to get into San Angelo as well and some of the surrounding counties. And I think the ITMs, I think there's opportunities for us in the future to put ITMs out in some of these markets as well. And then Matt might even want to talk about, possible growth in Amarillo, this year and opportunities there as well.
Yeah, I mean, like both y'all mentioned, we don't have any physical spaces up there yet.
That's right.
That is on the horizon at some point. I don't want to put a timeline on that just yet, but that's something that we're obviously interested in doing, and that eventually we do plan to have a branch in Amarillo. No timeline, but I'll just going off what you said though, we have hired a mortgage loan officer, and she's officing out of Rock One, which is one of the fastest growing real estate groups in the Amarillo area. We've used that business development team is also invested in the Amarillo Association of Realtors and multiple other groups there that we think that's a strong way to get into that market and expose Amarillo residents to some of the strongest things about the Alliance brand and some of the stronger loan products that we're able to offer. Obviously, anybody can still utilize our consumer financial services if they're in Amarillo through the app, through online.
Right.
I was gonna say David and Kinsey. They've really taken some of the products that we did really well here in Lubbock with, and they're using those as tools in those markets. The Home 100s and some of the other products that we offer, doing the HELOCs and really and adding McKinsey to the team there at Rock One. That's just another step for us getting to Amarillo even faster.
That's right. And it really kind of mirrors our strategy regarding mortgage here in Lubbock. We expanded in our partnerships with 2 different real estate agencies in Lubbock. Do you want to talk about that a little bit?
Yeah, we did. Actually, it's been kind of a process for a while. We started off with partnering with Keller Williams, and so we actually have it's a new design, and we have an individual that is a business development person that houses over there with them, and she spends most of her day, and it's Catherine over there, and Catherine spends most of her day partnering with them and educating them as they have new hires come on that are coming into the real estate market about the products that Alliance offers and educating them on the tools that we have that will help them be successful. And with that success, we've added Exit Realty here in town, and they've become a very strong partner with us too. You might think you're seeing a branch when you're driving around the loop, but it's actually Exit that's added a lot of our fascias and a lot of our the Alliance brand outside their building, and they become a very strong partner of ours this year as well. And so just being able to offer tools to them that actually housed in their location and make it easy for a realtor when they're trying to find somebody to a lender that we can be right there, be a resource for them immediately in most cases, and bringing more people to the Alliance credit union.
Yeah, and I think the home buying process is a great example of a really complex and stressful process for a lot of people. And even though we have 48,000 members, including joint owners, we're not always the first. You don't always think about your credit union as a mortgage solution. And again, it's stressful. It's very relationship driven. And so, we wanted to make sure that we were interjecting the Alliance, suite of products into that experience so that our members would know what we have to offer, and we would be there at the real estate offices, ensuring that that our membership can find Alliance when they're going through that home buying process.
Right. It's just adding accessibility
Exactly.
in those moments that really matter.
Exactly.
You were talking about Kinsey, which brought up a good point. Last year, we wrapped our trucks and a car for Kinsey, so we can see the Alliance blue and the star
Driving around.
town.
That's right.
Don't honk or anything at them. Hopefully they're driving well. So we've talked about all of the different things that were successes in 2023. We talked briefly about some of the things that we see for 2024 in membership benefits and in the economic projections as much as we want to. Can you talk a little bit more about vision casting for 2024, different things that you see on the horizon, what our members can expect to see from their credit union?
I guess I would really invite our members to lean into their credit union this year. Stay tuned, pay attention to the products that we're coming out with. As I mentioned earlier, we're looking to leverage the strength we have in numbers so that we can find meaningful partners such as the Reliant Energy contract, the home and auto insurance I mentioned. We're also looking into partnerships for legal services, digital lockbox, and really a slew of other things that we think our members will find beneficial. So to that degree, I would say lean into Alliance. And then also, a lot of our members utilize us for one service, whether it's a mortgage loan or whether it's a CD. But take a deeper look and see what all your credit union has to offer. The credit union that we are today really is a full service financial solution for all of your consumer financial needs. And so we're going to be continuing to invest in the types of products that we believe will be meaningful and actually see our members achieving, tangible benefits in their financial health.
I agree. Looking forward to it.
Awesome.
Thanks, guys.
Thank you.